Hey, hello everybody out there. Happy Wednesday for everybody out there. Hope your trading day is going marvelously. Hope you guys are making a lot of profits out there and taking advantage of this small boom cycle, small rally that stock market has been doing over the past week. I'd say be careful still. Downtrend, no confirmed uptrend on the longer time frames. Just be careful, manage risk properly, respect your risk management rules. In doubt, do not overtrade at all. It's not a time to overtrade. And that's it for now. Be careful and manage risk, manage risk, manage risk, manage risk, manage risk. Having this said, here I am once again for another episode of Tenacious Tribe. You know already what I do here, or you should. I'm here to perform the price action and technical analysis of trending assets. And the elected one today, the chosen one today, is Verona, VRNA, Verona Pharma PLC. This equity trades on the Nasdaq. And the first moment you open this chart, you can already tell why this stock has been so popular lately. Look at this gigantic, gargantuan bullish candle. It reads 104.74% plus month to date. Like, wow, bravo. Of course, this is triggering investors' curiosity, and here I am. Since it is triggering investors' curiosity and mass, it is trending. Here I am to give my perspective about the stock, as usual from our once again. It's never enough to reinstate from our purely price action and technical analysis perspective, approach, methodology. I do not care the fundamentals behind this bull run. I do not care if this is a short squeeze. I do not care if this is a pump and dump. Maybe I do care about the signals behind these figures. But what I'm here to do is to look at candle patterns, single candlestick patterns, multiple candlestick patterns, candlestick sizes, candlestick volume price action, chart patterns, trends, trend lines, technical indicators such as the RSI, exponential moving averages, market stage analysis, market structure analysis. That's what I'm here to do. I don't care if the world is coming to an end, or if there's a drought in the grain belt in USA, if there's a war in Ukraine. I do care, but not for professional reasons, so to say. If the inflation is picking up pace, if it's losing up pace, I don't care. I care about price action. I care about technical analysis. Why? Because this methodology has been proven to work in the past. Why? Because it's based on a mix of human psychology and also with another aspect that has been going hand in hand with speculation for centuries, which is market manipulation. Not in a sense you typically used to hear it, but more like in a sense proposed by Richard Wyckoff for an accounting, for instance, these market manipulation campaigns that are conducted by smart money as a means of loading and unloading positions from the market, which keeps on repeating itself over and over again. Technical analysis is fantastic to try to ascertain what these big guys are doing and how can you profit from it. Mainly piggybacking uh, on their prominent choices. Having this said, let's go to VRNA and let's see what I see here. First of all, let's classify this market stage, this market structure. I'm setting already. She's like one step ahead of what I'm proposing to do, but you can already see it like a touch here, touch, 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 touch. This is for sure like a important value area. demand or supply. It depends when the price is. Right now, it will be classified as a supply area, and this one is also very easy to ascertain as a demand area. See, touch, price gets back to this area, and it's immediately rejected by the bulls here. Once, twice, thrice, four times, five times. Um, this is a demand area. Let's classify then our market structure. We do not see higher highs and higher lows. We see the market that it has been range bound since 2019. It has not traded above and closed above this threshold, and not traded below and closed this threshold. This market is easy to classify as a ranging market. Why does this matter? The classification of the market. This matters because what works in an uptrend or works in a downtrend is not the same thing as what works in a ranging market. We know that markets trade from ranges to trends and transition from trends to ranges. Accumulation, uptrend, distribution, downtrend, accumulation, on and on and on and on and on. We know that what works in one market tends not to be the same thing that works in another type of market. So the first thing we're doing here is establishing what type of market structure do we have here. We know already like that this is a ranging market. In ranging markets, what typically works is to buy at support and sell at resistance. It has worked here. At this stage, we didn't know exactly. We didn't know for sure that we were like in a ranging market. But I mean, once again, price touched here, went back to support. If we bought here, we could easily have sold here with the target here, sold here, covered here, profit, bought here, sold here. Once again, that's how it pretty much works in ranging markets. That's how you get the better chances of profiting. Um, Selling at resistance, buying at support, selling at resistance, buying at support, selling at resistance, buying at support, selling at resistance. What else? Okay, so it looks very easy. It is not. So, I mean, neither trends last forever nor ranging markets last forever. So, something that could very easily happen here would be something like this: a breakout from this market structure and close. And in this case, we knew the trending stage would be coming to an end, and we would be transitioning to an uptrend. Or conversely, we could, for instance, see like a break structure in the lower time frame here, or a single candlestick pattern telling us that the price has been rejected from this threshold level, and the odds are price would be getting down to support area. And in case it went to support area, LDR, I like to see the small consolidation before a breakout. If it breaks below, then the downtrend would resume, or a downtrend would start. In this case, I said resume because it wasn't a downtrend here. So we make this range sort of a continuation pattern in a longer time frame perspective. I like the very large time frames. The upper time frames are very attractive to me for a set of reasons that if you know them already, I invite you, I recommend you guys to check my previous posts. I'm quite expressive on this point here, so I'm sure you're gonna see this reference to this preference in previous videos. Okay, so picking up where we left it. Okay, now we know that in a ranging market, we ought to sell at resistance and buy at support. We know also that ranging markets do not last forever. So what you're going to try to do here is trying to pick up clues from what's happening on this ranging market and trying to ascertain if we have a good odds of seeing a breakout here from resistance, or conversely, if we could be confident that or have, being confident is it's a very dangerous expression. You can never be 100% confident here, but I mean you can sort of pick up signs from this market as to whether the bulls or the bears are winning or losing gears. Sort of this, if this is an accumulation phase or a distribution phase that's going to precede a downtrend or an uptrend, you can sort of pick up these small hints, small clues and cues that this market is giving you, and try to make a case for a bullish or a bearish trade. Let's try to read the market. Let's try to give us this market. Let's try to give some context to a possible trigger that we might receive here. But let's say, for instance, that we receive a sell trigger. A sell trigger in a bullish context would not this divergence would not leave me extremely comfortable to trade short. For instance, would cause me to, if I saw here, for instance, a short trigger, whereas I saw here bullish signals throughout this accumulation phase or ranging market, this would at the very least prompt me to be careful with my position sizing, perhaps not trade and look for a better setup out there. What else? But else, perhaps restart my analysis or redo it or look more thoroughly for things that I might have overlooked, and to say the least. So we have to be attentive of the signs that this market is giving us in this stage. And what do you see here? On the strength side, I see very large bullish candles here. Look at the size in comparison to the red candles. This is a sign of bullish strength. Look at this candle, this candle, this candle, this candle, this, and this. And let's see what the bar sizes say about it. Yes, it confirms it. Look at the size of the candles in comparison of the green candles in comparison to the red candles. This means that there's a good chance that the bulls are dominating this market. They are more active in this market. They have strength in this market. What else can you see here? We can also see that the volume for these green candles is pretty much confirming the price. When you see like a big candle with I mean, this is not ideal. I must say. I'm going to tell you why in a upcoming phase when you look at the weak signals from this market. But generally speaking, you can correlate here the green candles with above average volume or with wider and bigger with bigger green. I know it's not very perceptible here, but these green candles converge with bigger green candles on the volume side, which is a good sign that the volume is confirming what the price is telling us. On the weakness sides, okay, so before proceeding to weakness sides, we already established that there's definitely bullish presence here. The candle we're seeing right now, of course, we need to wait for a closure. But the candle we're seeing right now, it's a very prominent and ostensible sign of a bullish presence. And look at these candles. Look at these red candles. Very slim. Very. You see that there's no bulls, no bears stepping into this market. No interest from bears. Look at this candle, for instance, in contrast to these ones. Bears were massive here. They were like very interested in selling this stock here, and here you see that they were not so attentive. That they sort of even disregarding the stock, sort of even not paying attention or not being assertive in this downward move. On the weakness side, I mean, first of all, look at this resistance area. This looks like a brick wall, a juggernaut. Look at this upper shadows from these candles. This is bearish presence all over. Bearish, bearish, bearish. They are telling the investors, okay, to the bulls, okay, you cannot step your feet in my territory because I'm going to push you down. That's what happens when price goes to 10 to the 10 $12 threshold. At a certain stage, the price was here, and the bear said, "No, not on my watch," and they sent back the price to 557. This is a massive domain from bears, I think. Same follows for this one, for this candle here, and linking this with what I said before. I know these are green candles. In the first instance, this would tell us that the bulls are commanding here because you see green candles. But on the other end, I'm not so sure about it anymore because at the end of the day, the price closes even below 1/3 of the range of this candle. This means that the bearish power is tremendous. They have presence here. This resistance threshold is strong, and they're pushing down the bulls from this resistance threshold. This is a weakness sign for this market. This is a sign of bearish presence as of this threshold. This tells me that I don't want to be 100% confident of stepping in already on this trade, for instance. Of course, that if you keep on testing bears and keep on buying here, Eventually, the bears will get weaker, and if you see a breakout here, that could be a very bullish channel. So far, you haven't had the closure of this candle, so you have to be careful because this threshold it's really bears territory, and we don't want to be colliding against it. Uh, Okay, so now, yeah, conclusion. We got strength from both parties, bulls and bears. Okay, what to do next? Value zones identified. This zone and this zone. What else? What else do we have here? Bearish presence here also. Bearish presence here also. What do you know? Do not trading side. Let's go for a bullish scenario to start with. A bullish scenario. Okay, we know already like in the trending market, in a ranging market, we want to buy from support. Support is here. So one scenario that I would bought is this. This is a false breakout. This price is not old, and the bears do the same thing as they did here in July 2020 and December 2019, and they reject the price and send it back to support. It gets back to support. Okay, I would be buying if I saw like an entry trigger at this level, like a single candlestick pattern or a breakout structure in lower time frame. This would be a buying trigger, and this would be a value zone. Why? Because this would be a cheap feedback loop, cheap and quick feedback loop area, so to say. For the same reasons that I'm stepping into this trade, because this zone gives support to trade. I know that if the price closes below this level, my trade is wrong. There's no longer support for this trade. Therefore, I have no reason to stay on this trade. I sell. Uh, let's say market gets to this level. I know that there are bears here. This is going to work as my profit target. What's the risk reward wish? 1.7 acceptable, but I mean not ideal. I aim at one to at least. This is not exactly perfect. This stop loss could give it some buffer, keep it here, and this would give us like a risk reward ratio 3. This would be decent bullish trade. Another bullish scenario would be something like this. Price. I like this consolidation a lot. Before it gives some sort of structure before the breakout, and a logical place to set the stop loss in here. Something I like to see also in this market would be a breakout from this threshold. If there was a breakout and close from this threshold, I know that this threshold of bearish presence will not be definitely not be so not be so strong. I'll see a lot of bears on the red, a lot of stop losses getting triggered from the bears, which would fuel like a bullish momentum, which would be super confirmed. This would be nice. The only thing I don't like here is perhaps the fact that this would entail stop loss below, because if the price runs gets back to this level, this means that this idea encloses. This idea is probably wrong. The only thing I don't like to see here is probably that the fact that this risk to reward level is not ideal, 1.18. And this is a zone where the bears will be, as you can see from these weeks. And this also, perhaps even this week for sure. That's another place where the bears will be. Something we could do here to make this trade more attractive would be to take profit here once and take profit here twice. So to say, selling off position here, selling off another half here, for instance, and keeping the stop loss here. That's it. On the bearish side, what would I like to see here? Maybe this price getting rejected, getting back to support, and bump trading below this area, breaking below this area, and trending downwards. Stop loss above this level. If the price breaks out and closes above this level, our idea was wrong. Take profit, perhaps trace with 10 EMA, for instance. And that's it. That's pretty much what I'll be doing here. You have no more time left. 20 minutes is my self-imposed cap, and that's it. Hope you guys like this content. Hope this was useful to you guys. It's no financial advice, of course. This cannot be, for instance, at double checking your analysis, completing your analysis, provide you another perspective. Perhaps even if you agree with it. Enforce it, but that's pretty much it. No financial advice. Happy trading for you guys. Thanks for your time. Cheers.